I've now given myself an impossible mission. I've got 7 minutes to talk about Africa, and it's not to try and justify that it's going to be a $29 trillion economy by 2050, bigger than Europe and America together. The challenge is to try and do 20 slides in 5 minutes. So you're going to have to bear with me. This is going to be like blipverts. What's going right in Africa? First, government debt has halved from 80% of GDP down to 30% in the last 10 years. At the same time as the West has seen its debt levels, G7 debt levels, government debt levels, rise to 120% of GDP. African governments are running policy far better than they used to. African governments running budget surpluses through the middle of the last decade. Yes, a deficit during the global financial crisis, but rapidly got that back under control. G7 countries have not got their budget deficits under control. African governments are looking more and more German by the day. This is what the Germans would love everyone to be doing what Africa's doing. Unfortunately, the Spanish and the Greeks don't behave. How much of this good story is just China? It's played a big role. It's helped. Exports out of Africa, this is Sub-Sahara, South Africa and North Africa, about 170 billion in the late 90s. We're now running at nearly $700 billion. That is helpful. But China's only about 1/7 of Africa's total exports, about $100 billion. And China's in this strange position where it's running a trade deficit with Africa. Most unused to that, which is why it's lending so much money and trying to encourage African governments to employ Chinese construction companies to build roads, so at least China exports something back to Africa. But the rise of foreign direct investment happened well before China. Back in the 70s and the 80s, Africa was getting less than 0.5% of GDP in foreign direct investment. No one wanted to put their money into that continent. Since the mid-90s, it's been running at 2 or 3 or 4% of GDP. And this flood of cash is creating jobs, creating new markets, new oil discoveries. You've seen oil revenues go from $1 billion in the 60s, in today's money, to about $35 billion in the 90s, to $235 billion this year. And that huge increase, that $235 billion of oil revenues is more than double the infrastructure needs that the World Bank says Africa has, of $90 to $100 billion a year. So the money is now available to do infrastructure as well. And it's going to pick up. We already know the production in Africa is going to go from 10 million barrels a day to about 12 million barrels a day this decade. So there's been a huge boom in the last 30 or 40 years, all of it in Sub-Sahara. This morning's news is that Tullow Oil has found another oil discovery in northern Kenya. So this is just part of what is people beginning to discover what's under African soil. New mining projects. The new mines, new iron ore projects are expected to go from 0 of new output now to maybe 600 million tons of new output in 10 years' time. The third fast-growing economy in the world today is Sierra Leone, up 21%, the IMF reckons. Why? Because one of these projects is coming on stream. It makes a huge difference to the growth rates of some of these countries. So you'd think from this it's all commodities and China and oil and mining. In fact, 50% of the growth, 53% of the growth in the last 7 years comes from services. Mining is actually down here at 14%. So the real boom in Africa hasn't been China, it's been telecoms. There's been 500 million SIM cards sold in the last 7 years in a continent that everyone knew was too poor to be able to afford telephones. And banking is going to be a boom area. At the moment, we are stuffed in the West with debt of 200% of GDP, private sector debt. You've got South Africa, one of the richer countries, at about 65-70% of GDP, and Sub-Sahara is down here at 20 to 40. When that booms, countries grow fast. If you look at China today, it's up there at 130% of GDP. This is what Africa can be achieving over the next 20 to 30 years. I think crucial differences, though, right now, is that the number of Chinese young people have dropped by 20% this decade. 30% down if you count the US Census Bureau's estimates. The number of young people are disappearing in China. And what that means is that this decade, unlike previous decades, if you want cheap labor to move into textiles and light industry, Africa is going to be the source for that labor. Education is also crucial. If you go back 30 years, less than 10% of people in sub-Saharan Africa had secondary school education. Now that figure is 40. That's not good, but it's a hell of a lot better than it was 30 years ago. And 40% is roughly where India was in 1990 or Mexico and Turkey were in 1975. And we know what happened to those countries after that. I could also show you something about democracy. This is a picture of Africa by GDP. The pink are weak democracies. This is a strong democracy. Actually, most people in Africa are now living in strong or weak democracies, rather than autocracies. Eritrea, Morocco are among those which are still seen as fairly autocratic. Now, corruption comes up a lot. What about the problem of operating in Africa? Is the corruption not too much? What I'm showing you here is per capita GDP, how rich you are, versus your Transparency International corruption rating. What you'll notice is that a good rating, a low, not much corruption, is very well correlated with high wealth. As you get poorer, corruption is more and more of a problem. So you can say, I will not invest in Africa because there is corruption. What you're really saying is, I will not invest in a poor country. And yet, as countries get richer, they will move up that curve and they will become less corrupt. One of the things that most economists do is make a bad forecast. In fact, almost all economists make bad forecasts, but they do this in a very predictable way. Most economists look at the last 10 years of history and say, what was the growth rate? It was 2% in the last 10 years, so in 2000, it's a hopeless continent. After 10 years of growth, the average growth of the last 10 years has been 5 to 6%, therefore, Africa is rising. It's not very sophisticated. What we are arguing in this book is that actually we are following a trajectory already done by India, already done by Asia. For 30 years, African growth has been identical to Indian growth from 1960 to 1990. And we know what happened in India between 1990 and 2010. It got faster. Despite many of the problems that we're still aware of, it got faster. And India is 10 years behind developing Asia. It's been identical to developing Asia for the last 20 years. So we can make a fair assumption that actually African growth is just going to get faster and faster. Nigeria will overtake South Africa by 2014, Germany by 2037, in today's money, Japan by 2047, in today's money. So where Japan is today. The aviation boom. There's going to be 100 million flights in Africa in 2010, roughly. 200 million at the end of this decade. 800 million, 1.7 billion. Think of Heathrow Airport. One runway, should we have, so we've got 2 runways, should we have a third? In Africa, we should be thinking we've got 1 runway, we need 17 in 40 years' time. That's the boom that will come if they just continue to follow India for the next 20, 30 years. Motor vehicle sales will beat America by 2030 and China by 2040. And the result will be this. Huge amounts of wealth and GDP in East Africa, Ethiopia, Kenya, Tanzania, Uganda, Nigeria, as well as North Africa. South Africa, much less important. I will stop there and try and hand over to somebody else. That's the basic message, some of the messages we're trying to get across.
And while we agree, of course, with the overall thrust, Africa has been growing for the last decade. Africa has been outperforming the global average. Increasingly, what we're seeing is the discussion on African growth becoming that much more nuanced. And while we don't doubt at all that we are seeing a step up in Africa's growth rate, it fits very much with what we at Standard Chartered have described as a growth and commodity supercycle. It doesn't actually take that much of an acceleration in growth for it to be defined as a supercycle. All we need is a meaningful change from where we were before to where we are today. Notwithstanding the global economic crisis, we have seen growth rates in Africa continuing to increase, perhaps will soon surpass their pre-crisis trends, and that we think is encouraging. However, there's still a lot that needs to be said about the challenges that Africa faces. And I'm just going to spend a little bit of time running through some of those, not denying at all and not disagreeing with the broad thrust of what we've heard, but thinking that maybe casting a more critical lens at what is happening in Africa will be useful. Can Africa actually replicate the development experience of Asia? Now, here it might be important to draw the distinction between economic growth, and yes, it will be very easy for economies like Sierra Leone, starting off a very low base, to achieve extraordinary growth rates, 20 to 30% on the back of new iron ore production. But there's a meaningful difference between economic growth, especially off a weak base, and economic transformation. Increasingly, what Africa's policymakers are starting to look at is that transformation aspect. Is development actually happening? Are African economies transforming? One of the problems that we have is just looked at in a very, very basic way, the structure of Africa's economies. The commodity dependence that was in place a few decades ago, if anything, has worsened. Commodity producers in Africa, even though a lot of the growth has come from the non-commodities sector, it's been fueled by consumption, it's been consistent with the rise in financial intermediation and private sector credit that we see in the region, but fundamentally, the structure of African economies still very commodity dependent, and that, of course, creates challenges, especially in the context of a global economic slowdown. The other question that we would need to explore is that of inclusive growth. Yes, African economies have been growing. The commodities story has generally been good news for Africa. But because so much of that impetus has been driven by natural resources, Africa remains, if one can generalize about the whole region, relatively unequal. The second most unequal region, coming only after Latin America in that respect. And as much as we celebrate the region's trend towards democratization, I think one has to look also at the quality of democracy that is in place and the challenges that these rising levels of inequality are going to pose potentially for the future path of politics in many different countries. Then there is the matter of demographics. Here is an area where we are fundamentally very positive about Africa. We know about the growth in Africa's populous economies. We've seen the kind of growth rate already experienced by the likes of Nigeria and Ethiopia. And Africa, of course, is going to continue to see a big step up in its growth, even if we just see a continuation of current consumption trends. Because unlike much of the rest of the world, which is aging very rapidly, Africa is going to see this boost a larger working age population as a share of the total. And other things being equal, although there are, of course, challenges, that should mean a rise in consumption, a rise in overall growth, a rise in the kind of economic returns available in Africa. If we consider Nigeria today, it's thought, according to UN population projections, that by 2035, Nigeria may well be the fourth most populous economy in the world. And by 2055, it's likely to be the third most populous, after only India and China. But what is very meaningful is that if we look at those UN population projections and extrapolate out over the next century, it's not just Nigeria. Roughly around half of the world's most populous economies are going to be in Africa. Now, that does mean that in terms of the kind of growth that this region represents, it is going to be too important to ignore. But that also means that the challenges need that much more attention. Is Africa making the most of its human capital endowment even today? We saw the charts showing a lot more Africans receiving secondary education, and certainly the trend has been positive. But one still has to be concerned at a situation where, in terms of primary school completion rates, we're still talking about a ratio of about 50%. If we're looking at whether Africa can replicate the development experience of Asia, one of the key missing factors is the kind of skills level, the skills base that would be needed with that sort of educational attainment. This is still an area that needs a lot of attention. There's also the whole issue of competitiveness. Now, much debate about whether an African growth model should replicate an Asian growth model. Should it be about export-driven growth? Should it be about cheap manufacturing, cheap labor in African countries? Yes, if we look at just the wage structure, many African countries are already much more competitive than their Asian counterparts. But they do not yet have the large-scale infrastructure that would make that kind of export-driven growth possible. That's a concern. There's been a lot of talk also about regionalization, but pay attention to how much of those regional agreements that are supposed to be driving an Africa super economic bloc, pay attention to how much of that is actually being enforced, how much of it is actually operational, and clearly there's a large gap between the intention and where Africa is. Now, not to be too downbeat, we do of course believe in Africa's growth prospects, and if we're looking holistically at the way global growth is going to be driven, there's no question that African countries with relatively good fundamentals still are primed for growth. There are going to be challenges. The quality of democracy does need to be looked at, but overall we think we're moving in the right direction. Nonetheless, these very important facets, what could go wrong? What isn't changing fast enough? What is the structural transformation that still needs to happen? We think that these questions continue to be important. Thank you.
Thank you very much. So I think they've both given a good macro overview, and I think, I represent the link between Charles's optimism and Razia's let's not call it pessimism, but maybe reality. Maybe a few seconds. Let me talk about Satya, because they're both well-known institutions compared to us. Satya is a private investment fund which invests exclusively in Africa. We have been investing in one shape or the other in Africa since 1998. The chairman of Satya is a gentleman called Mo Ibrahim, who some of you may have heard about because of his work in telecoms as well as the work he does with the Governance Prize. When we think about Africa at Satya, we look at it this way. We are investing in the opportunities created by the formalization of African economies. And what does that mean? Well, formalization means urbanization, the creation of a broader educated class, the creation of a taxpayer base, the improving regulatory and governance environment. So that formalization means that there are some sectors which we see as very interesting and where we think we're going to see the first benefits of what Charles is speaking about. But in our minds, this is where the challenge side that Razia spoke about is important, because you can't say every sector is going to be important today in Africa. When we look at the market, there are four preference sectors we look at: financial services, consumer goods, TMT, and when we think about those sectors, what I think is very interesting is that in financial services, for example, we've made an investment. In consumer goods, we've made an investment. In healthcare, we've made an investment. In TMT, we've made an investment. And over the last 4 years, what we've seen in those sectors are the benefits that Charles is talking about, but also the problems that Razia has spoken about. Let me give two very practical examples. In financial services, one of the challenges you have is in the banking sector, you have to roll out your branches to reach people. The cost of rolling those branches out means that in every branch you have to do your own power, your own water, your own IT connectivity. So the cost of rolling out branches is much higher than it would be in these markets. So when you think about that and you say, how am I going to scale my business? you would expect to have lower profitability in the long term in financial services businesses. And this is where I think there's an essential link between where Charles is and where Razia is, which is you have to locally adapt your business model to be successful in these markets. In financial services, that means using technology. We're invested in a bank which has the smallest number of branches, but it's the most profitable. And the reason for that is because 5-6 years ago, if you're in Lagos, every Friday, the banking halls were packed with people who were trying to get money out for the weekend. And that was very inefficient. A lot of banks built out branches, but what this bank did was invest in their ATM network. Today, more cash goes out of their ATM network than from their bank branch. So that's using technology to locally adapt your business model. I think the other thing I would point out in Africa is that you can't expect to go into Africa and find problems solved that are still wrong in your market. So if you have credit issues in your global business model, you will have them in Africa too. And a lot of investors, this is where they make a mistake. If I look at our healthcare business, it's one of the challenges. You're still going to have issues with receivables anywhere you are in the world. But again, you can locally adapt your business model to deal with that. Another thing we've seen with local adaptation is in consumer goods. We have an investment in a toothpaste business in Tanzania, which has #1 market share. What is interesting in that business is we see a lot of growth in what I call single-use sachets. So you buy your toothpaste every morning and you use it. Why is that? Because it's a lot of working capital to buy a big tube for 1 month of supply and keep it on your shelf when you don't know if you're going to eat tomorrow. It doesn't make sense. So locally adapting your business model means changing your pack sizes. And when you talk to the big multinationals, that's what they've realized. The final thing, and of course I would say that, is your choice of investment partner is key. If you have the right partner, it prevents you from making the obvious mistakes and helps you learn faster. It also means that you find people who have already gone through the trouble of unlocking that business model. So they understand the consumer behavior and the consumer need and where the demand goes. Final point I would say is you have to balance the Africa growth story with what Razia has pointed about in the shortage of talent. And we see that a lot in our businesses. Our thesis when we invested in the healthcare business was we had already gone and mapped out all the diaspora medical professionals. We met people, say for example, in the Nigerians who are in the UK who are medical doctors. And we thought it's a very simple thesis. You invest in a healthcare business and you repatriate them onto the ground. In reality, it's very difficult. Why? Because the local doctors said, no, if they're not trained here, they can't come back home. So we had absurd situations trying to get them accredited. So these are people who are highly qualified, who you can't get onto the ground. We had the same challenge with bringing back what I call CEO and executive talent. And what I find most interesting about it is if you're a very high quality Nigerian and someone says come and work in healthcare, you rank it below telecoms, financial services, etc. So we ended up having to bring expats because when we thought about how much we're paying versus the talent, it made sense to get an expat. So the talent issue is very important, and I think, as Razia said, that will be the key to unlocking African growth. Thank you.
Thank you very much, Jide. Jide, you tell a very interesting story. Years before I became a journalist, I was a medical student. I studied medicine for 4 years in Nigeria, and at some point decided to go back to my native Ghana and thought I could transfer from 4 years of medicine in Nigeria to 4 years in Ghana, and they told me no, that the way you study medicine in Nigeria is different from the way you study medicine in Ghana. And I never have been able to find someone to tell me exactly what that means. But I think it turned out okay. But I think it does capture, to a large extent, the challenges of people who are trained elsewhere returning to their home countries. But, you know, ladies and gentlemen, what I'm going to do now is just field a couple of questions for our guests and then open it up to you to bring in your own thoughts as well. And I'll start with you, Charles. Razia raises a very interesting point. As I was looking at the trajectory of African growth and those benchmarks you were identifying, 2015 surpassing South Africa. Razia, I know you got a lot of feedback for that as well. Surpassing Germany or surpassing India. The question I want to ask you is whether you factored in what Razia raised, the population growth of those countries. And secondly, the quality of education that people are receiving in those countries, because clearly there is a connection between quality of life, economic growth, and the kind of education that's being provided for people on the ground. Does anyone actually know how many mathematicians and scientists that African economies are producing, or IT experts, those who are essential for the kind of economic growth that you want to see over the next 10, 15, 20 years?
On the growth thing, what we're saying is that the African economy is going to be, or Nigerian economy is going to be bigger than Germany is today in 2037. I'm still assuming, maybe a bit optimistically, that Germany grows. It might never grow again, and certainly the Japanese I'm a bit more worried about as well. So we're not saying that they're going to be bigger, absolutely, and certainly per capita GDP,
yes.
Even with this phenomenal growth for the next 40 years, Nigerian per capita GDP will be about $15,000 by 2050. Compared to 50,000 in.
But it also
today.
does make a bold assumption that Nigeria will remain a stable economy for those years to come, right?
It becomes self-reinforcing. As you get richer, democracies become more secure and safer.
Nigeria's gotten richer over the past.
And
Some
last
Nigerians have
year-
gotten richer
Last
over the
year-
past 20 years.
Last year had the best election in African history. The most peaceful,
You mean in
successful,
Nigerian
largest-
history?
Never have so many people voted in one election in Africa. And it went fairly peacefully. And I think that's because their per capita GDP hit $2,000, while it's lower down in a number of other countries and still more
Interesting,
vulnerable.
because I was in Kano covering that election, and a couple of thousand people died. It depends on your measure. I'm not being
relatively the best.
Relatively the best.
We'll get, and the second issue of the quality of education, absolutely key. So education is now sufficient for Africa to make the next stage. It's not sufficient for it to be rivaling what Japan does. And it doesn't need to be. To be able to get fast growth, you just need better education than you had before. The royalties from the book is going to a university in Ghana. So we believe, so it's not my fastest billion, we do believe that...
Stop lying.
Razia, I'd like to get your thoughts on governance, because you touched on that for a moment. And I've always struggled with the argument, not on a personal level, but just purely from the theory that democracy is directly related to economic growth. Because, when you look at some of the fastest growing African economies and the amazing success stories, some would call it economically, of Rwanda or of Ethiopia, I dare say there are many who would argue that those are not the most exemplary democracies on the continent.
Okay, I would guess that there are two parts to this. On the one hand, there's the actual experience that we've seen in Africa, where we have seen, no question about it, an improvement in democracy broadly. We've seen countries broadly moving in the right direction. We're not commenting so much on the quality of that democracy, but that has been associated over time with this step up in economic growth. And if we look at the causal effects in individual countries, it becomes clear that when we did see greater multipartyism, so something about the quality of that democracy, we did see electorates feeling empowered and being able to vote in or vote out governments depending on whether they were able to deliver macroeconomic stability and growth. Now, there is also the debate, not just in Africa, but globally. If you look at the economies that have outperformed, if you look at the economies that have brought the largest number of people out of poverty, it's clear then that that question between democracy and economic growth becomes a little bit blurred. But I think it's still fair to say that most people in Africa would still aspire to more democratic forms of governance, and they would still see this as an important step in the right direction.
And just one big picture question before I throw one to Jide. The tendency to look at the entire region, the entire region's growth, do you think that at times it's somewhat misleading? Because there is a very different kind of pattern of economic progress that you're seeing perhaps in Ghana, in Sierra Leone, which, as you pointed out, went so low to a point where the growth just has to be phenomenal. as compared to South Africa, as compared to Tanzania and elsewhere?
This, of course, in the context of Africa, is always important. We are talking about so many different economies that it's very difficult to generalize. However, we were considering this point about so many of the world's top 10 fastest growing economies being African, depending on your definitions over the medium term, 6 or 7 at least, perhaps more over time. How many of the world's slowest growing economies over recent years have been African? And actually, we've seen a meaningful change in terms of where we might have been 2 or 3 decades ago and where we were very recently, where we're expected to be in the medium term. So yes, you're absolutely right. We do need to look at individual African economies. We can't generalize too much about a region. Even within countries, there will be regions that pull ahead and regions that fall behind. Nonetheless, I think it's broadly true to say that we have seen the step up in the economic performance of Africa, and we know that there are positive externalities.
All right, thank you, Razia. And Jide, for you, I mean, to a large extent, you represent the investor class doing business in Africa. And continuing with that point, it's not every country that you are doing business in as much as you would say, yes, we only do business in Africa. Certainly, there are some countries that for you pick as winners and some that you do not, right?
Yes, that's true. But in a way, it's slightly, I would say, there are three regions that you focus on. So West Africa with Nigeria at the middle, East Africa with Kenya at the middle, and then Southern Africa with South Africa as the base. And those countries, in a way, represent the things that you've described. There's large populations, there's more capital going in, so there's education. What you find is because they're large multinationals, there are a lot of the associated services that will create that educated class, etc. But I think I wanted to pick up on the point Razia said about training. What I think you should also see is that the training may not necessarily have to come from the educational institutions. If you look at the companies who are very successful today, they're training their people. And you realize that you can't wait for the public sector to provide the services that you need if they're essential. So you look at the banks, they take the graduates, they train them, and then they recruit from that pool. The similar trend you can see with the large multinationals in consumer goods. The other point I wanted to pick up was on regulatory. I think that's something which people are not really aware of in the global sense of things because it's happening in a very small way. But I'll give an example of Lagos State in Nigeria. Today, if you need anything from the governor's office, you have to go with your tax clearance certificate showing that you've been paying your taxes. Otherwise, you won't be served. Now, of course, there are things you can do with the clerk to give you a tax clearance certificate. But the reality is the fact that they even request that tells you that there's a change.
Progress is being made.
And we also see it in minimum capital requirements. You notice that in a lot of sectors, they've increased minimum capital requirements, and they're now re-accrediting businesses, which means they're leveling the playing field and making it easier for you to do business. So I think those things together, when you look at the countries who are doing that, they tend to be at the forefront of where investment is going in.
All right. I'm going to get out of the way in just a moment and open it up to the floor, but I just wanted to let you know that this is also being streamed live, and we're also receiving questions on Twitter. So I want to get one of the Twitter questions in before we open up to the floor. This is from Joseph Marquez, who is with the Brazil Institute at King's College in London. And his 2 questions are: describe the current regional role of Angola in sub-Saharan Africa, and what is the likely development of the political situation in Angola in the medium term? Not more than 500 words, submit tomorrow. No. Help someone with his homework, but it's a great question. They've just launched the $5 billion national fund, is a sovereign fund, stand corrected. Charles, I'll let you take a stab at that first. Perhaps the role of Angola in the region as it emerges.
Well, you talked about, and there's 2 things there. One is the sovereign wealth fund. What are they going to do with the $5 billion? It looks like they're going to play safe and invest in US treasuries to some extent, 1.5%, which I think isn't great. I'm reading a fantastic book by the World Bank chief economist who's just done something called The Quest for Prosperity. He talks about the importance of using this money for regional infrastructure, which would be more helpful. And on politics, that thing about democracy and getting wealthy, the one exception is oil producers. And Angola produces a lot of oil per head. Nigeria is lucky, it doesn't. Nigeria is an oil-poor country. But Angola is very wealthy on oil per capita, and therefore political system, I'd be surprised if it changes.
Razia.
On that issue of the sovereign wealth fund that would raise, that has been raised, I would just add that Botswana, a much smaller economy, much more modest in terms of its earnings capability, already has a sovereign wealth fund of about $8 billion. And you compare that with the great debate that we see underway in Nigeria. There's been $1 billion worth of seed capital. Maybe that's increased up to $10 billion. But still there's hesitance to be putting away resources-related revenue, resources being a finite commodity, and saving that for future generations. I think this is going to be a big hurdle for African economies going forward. For too much of the recent economic past, there's been great dependence on commodities. There isn't enough thinking about what happens when you can't rely on that any longer. So yes, great prospects for Nigeria, simply because the oil is never going to be enough in per capita terms to really make a big difference. But we do need to see that transformation happening now.
All right. Jide, you good? Or shall we?
I think on Angola, it's one of the markets that we are still hesitant on. So,
Says enough. Ladies and gentlemen, we're going to open up to the floor. If you could be as straight to the point as possible, just stand up, introduce yourselves, and we'll go straight to your question. Sir, I'll take these two first. Sir, in the green time, please.
Hi, Daniel Berry from Silk Invest. I want to hear you focus and drill down a little bit on the difference between GDP growth and GDP growth per capita, because job creation is one of the big challenges in all of this. You've talked about effectively this being an area where there's cheap labour, but there are very few African economies with a manufacturing sector and a manufacturing sector that exports, which is what it will take to create those jobs.
I think that's very important in that there was no... The issue about demographics in the 80s and 90s was that African demographics were great then as well. It didn't help, because there was also great demographics in China and Asia. So why would you bother to set up a factory in Africa when you could go to China and perhaps have a government that was a bit more focused on these issues as well at the time? What I think's changed is that education story. Two things. One is the demographic shortages you're now going to get in Asia. So actually you have to start looking elsewhere. And two, the fact that they're coming through with a better educated workforce than ever before. So I think this is crucial. The big battle now is between Bangladesh, Vietnam, maybe Pakistan, and Sub-Sahara. They're the countries you have to rival against. And when you look at regulatory reform, what you find is that African governments are doing a far better job, actually, in many ways, at easing up the ease of doing business. Rwanda was number one in 2010. It's an amazing achievement. It never happened before. So that's saying that regulation is getting better, education is getting better, the demographics still support Sub-Sahara. I would expect to start to see that shift into manufacturing.
yeah, in fact, you are seeing that shift into manufacturing. So, for example, P&G is spending $250 million on a nappy factory in Lagos. And the reason why you also see that shift is because the ports are too congested, the road networks. So these long supply chains are just not working. The challenge alongside that will be finding the talent to move to run these factories.
Sir.
Thank you very much. Good morning, everyone. My name is Carlos dos Santos. I'm the High Commissioner for Mozambique. I wanted to thank the panelists for excellent presentations. And I wanted to ask them, if you were the president of Mozambique, what are the things that you think should be done? 2 or 3 things that you think should be the focus. We all know that Mozambique has just found huge reserves of natural gas, coal, but also a lot of potential in agriculture and other sectors. That's one side of the question. And the other side of the question is, we have always learned that there are no shortcuts to progress, but information technologies has assured us that there can be some shortcuts. Is there a case for shortcutting the industrialization of Africa? Could that be a way of making Africa grow? I wanted to get those questions. Thank you.
Please.
Maybe on the few things that Mozambique needs to do. Now, Mozambique, of course, has been an enormously successful African country. Even before the most recent resources boom, it was a country that fits very nicely with our analysis of the 7% club. It had attained those conditions that allowed for growth of around 7%. Okay, some of it was post-conflict, starting off a low base, but consistent 7% plus growth a year, which meant that effectively the Mozambican economy was doubling in size every decade. And that was even before the latest coal discoveries, the gas discoveries, things that will catapult Mozambique into an entirely new space. The difficulty for Mozambique's development experience, of course, has been that for all the mega projects that had been mentioned in the past, that had been going on in the country, there wasn't ever sufficient evidence that trickle-down was happening fast enough. We were seeing the growth, were we seeing the transformation, were we seeing the development? I believe that we are now starting to see more of that. Maybe it's just a process that takes longer, but there's absolutely a need not to just focus on the resources side of things, but to look holistically at the structure of the economy, look at employment creation, look at those key human development indicators, because ultimately that is what will create the base for future growth.
All right. Let me talk a bit on the second point. I think a good way to think about it is when you think about Africa telecom, what unlocked mobile telecom in Africa was if you went there with the postpaid model, which is to give credit and wait a month to get paid, your customer base was very narrow because you had to do credit checks, etc. So it was unlocked by the use of prepay and per second billing, because it meant I could buy 2 minutes of phone credit, which was more in line with where my pocket was. What that meant was you suddenly turned it from a technology business into a consumer business, because then your problem was, how do I distribute this airtime? And if you go, that has created an entire sector of people who live from the margin from selling airtime. And that created jobs, and it's an entirely Pan-African business, mobile phone airtime distribution. So if you looked at it at the time when mobile was starting, there was a waiting list for fixed line. So Africa leapfrogged from nothing over fixed line to telecom. So let's apply that to another sector, retail, okay? If you look at, in Lagos today, there are 2 malls. If you look across most of Africa, you look at the big companies going outside of South Africa, trying to do retail rollouts. They haven't been extremely successful because no one is building the real estate fast enough and no one is interested in putting the capital to work. So where's the leapfrog going to come from? Well, what about e-commerce? Why do we actually have to have stores? What about direct to home? And you already see that if you go into some African countries today, in South Africa, in West Africa, you will find direct to home fashion businesses, direct to home cosmetics, direct to home nappies, food. And these are businesses where you order online or on your mobile device and it comes direct to your workplace. And what you notice is the pricing of these products is below the street price, because they don't need the margin for the generator, they don't need the margin for the shop staff, they don't need the margin for the expensive real estate. So when I think about how technology can unlock industrialization, it's really saying, what are the things where you can leapfrog and you don't have to do the in-between?
Sir at the back, please.
Hi, thank you. Good morning. John Algar, member of Chatham House. Charles, I was very interested how you likened Africa's past 30-year growth trajectories to that of India from 1960 to 1990, and how the continent is at the cusp of the accelerated growth seen between 1990 and 2010. So looking historically at that structural transformation that India's political economy and legal institutions undertook, what do you think the key public policy lessons are for Africa's governments when they're thinking about the next 5-year horizon? And I'd be particularly interested in kind of thinking about how India reformed their legal institutions and how they thought about property rights and how that potentially links to the Africa growth story for the next decade.
I I just got back from Mumbai yesterday, was asking exactly these questions. And there were changes. You couldn't own much property in urban areas and rural areas in India until there was a limit on how much you could own. That began to scrap that in 2005. I think the key lesson for the governments were infrastructure. They could not begin to imagine how much infrastructure they needed to build. They didn't have the confidence that it really was going to grow the way it did. So they didn't plan as much. And you go to India today, people still complain about the roads, about the ports, about the airports, about the lack of infrastructure. So I think one of the key lessons is that, and it refers to the Mozambique question as well, just keep on investing. Watch the politicians and the bureaucrats, because it's an easy way of stealing cash. But infrastructure is exactly what's needed more than anything else. And the other thing that struck me from talking to people in the last few days is the two trends they missed. One was tech sector. 1990, they didn't expect tech to do as well as it did for the next 20. And the second was real estate. They really are kicking themselves for not doing more to buy into the real estate story, because from 1990 to 2010, it's beaten all expectations.
Sir.
Hi, my name is Paul Wallace. I'm from the Banker magazine. One of the interesting slides you showed, Charles, was the one of Africa's debt levels having fallen in the last 20 years or so. But much of the reason for that is because of debt relief, not so much because of good fiscal management on the part of African.
It was because of good fiscal management. They only got the debt relief because they did the right thing.
Okay.
And the total debt relief was less than the Greek haircut on their debt last year. And I think the African countries have done far better with that debt relief than Greece has so far.
Okay, but Nigeria has a debt to GDP ratio of 20% today, and that's in no small measure down to the debt relief it got in 2005 or 2006, and Cote d'Ivoire last year got huge debt relief as well, once it had got out of its civil war. The question I have is just whether you think there's any danger of African governments falling back into that debt trap now that they're admittedly from a very small base, but borrowing more from the Eurobond market, from China and other places, or whether you think there's little
And you saw it in Zambia the other day, where they issue a Eurobond 13 times oversubscribed. Foreign investors falling over themselves to lend to Zambia at 5% in dollars for 10 years, or Nigeria today at 4 to 5% in dollars, which I think is extraordinary. So yes, global capital is doing what it always does, which is trying to seek out anything with yield, and it will throw money at anybody. That's what investors do.
Razia.
Maybe if I can add a little on this. I think the key difference between Africa and Europe is that, of course, there's still an immense amount of growth in Africa. So yes, we are seeing nominal amounts of debt increasing. Debt to GDP ratios, simply because GDP is growing that much faster, not really problematic. If we look at the frontier Africa space, Kenya, with a debt ratio between 45 to 50%. Ghana, which even after the rebasing of its GDP has a debt ratio that's gradually creeping up, over 40%. They probably have amongst the highest debt ratios, still not in the sort of ballpark range where we would start to feel particularly worried. What is a concern, however, in a world of quantitative easing and, of course, the rush for yield and the appetite for Africa because the growth fundamentals are good, it's just the appetite that foreign investors have to put more money into Africa. Now, a lot of this is needed, but it's not just the Zambia Eurobond. Look last week at Ghana's auction. That was supposed to have been an auction of 3-year debt, 500 million CD. There was a lot of offshore appetite for that. Because of attractive yields, it was increased to 1.4 billion CD. And one just worries sometimes if you're not seeing revenue collection ratios increasing that fast. Sure, GDP is more attractive, GDP is growing fast, but the capacity to build revenue from that economic growth is also going to be important to the capacity to service the debt. Then I think people do need to take a step back and look very carefully at what's happening. But fundamentally, growth in Africa, still attractive, debt ratios, not really problematic.
Okay, I only have time for one more question. I'm going to give it to Martin Plaut, sitting in...
Martin Plaut, The Mozambican High Commissioner kindly asked for some advice. Perhaps he should start getting his government to speak to Afonso Dhlakama, who's just gone back into the bush with 800 men and is threatening to begin the war again. So, and to be honest with you, when I look through this book, the one area that I'm really concerned about is your over-optimism about the politics. Frankly, a lot of the things that you're saying are hunky-dory economy polities are less than satisfactory. And when you begin to look at them seriously, they really are not as successful as you would suggest.
I'm only taking what Polity 4 and Freedom House uses their definitions.
Well, I think you need to then ask a few questions about their classifications, frankly.
All right.
We could go through
for those of you who don't know,
Martin
is BBC Africa editor. Sorry for the, just for the. I think the gentleman from the, because I do really want to keep this to time. I think you're with the Mozambican High Commission, are you?
No, I'm the High Commissioner.
You are the High Commissioner. Forgive me. For Cameroon.
Yes,
Okay,
thank
sir.
you. I know the time is already up.
Yes,
I just
please.
wanted to find out, because in the discussions we've had this morning, I didn't hear much about the role of regional integration. And I wanted to know precisely what you could give us an insight on what really can Africa do to, in terms of development and in terms of the need for more regional integration.
Okay, let's see if we can do a very quick sweep. Jide, would you like to take a stab at that?
Sure.
Just very quickly so we can wrap up.
No, so I think, look, it is an extremely important thing. The statistic Mo always quotes is there's 500 mobile phone lines in Africa. There's no mobile phone factory in Africa. And it's because each country negotiated individually, and they didn't come together and say, where do you put it? So I think for us, we see that as an important trend. I think the EAC is doing interesting things, and in West Africa, you can already export with ECOWAS into the neighboring states. So it's starting, but it'll take time.
Headline thoughts before we
I
wrap
just think
up?
the biggest opportunities are the rest of the world. Africa's GDP is 2 trillion. It's done great things, but the rest of the world's 60 trillion. That's the market to go for. It's the 7 billion people around the world, not just the billion in Africa, that offer the fantastic market opportunities for you.
Razia.
The problem is the starting point. Individual African economies, too small to be the solution, too small to scale up and achieve that external competitiveness. A good place to start. Leave aside the grand plans for regional integration. Just implement the trade agreements that have already been signed.
All right. Ladies and gentlemen, join me in saying thank you to Charles, to Razia. Before we go, a quick show of hands. How many of you watched the presidential debate? I'm talking about the one that was in Africa yesterday. You see, if we want to end on a note of optimism, last night in Ghana, in Tamale, you had a sitting president debating his election rivals on a platform, answering questions from moderators and from journalists. I think it says something good. Thank you very much.